Tokens that rise a lot also have the potential to come back down. There's a lot of attention on rising cryptocurrencies. Sometimes it's better to buy the things where nobody is looking. For example, Polkadot. Is Polkadot, which is here at the bottom left, potentially a good bet right now? Because in the end, it's still the 30th largest cryptocurrency in terms of market cap. It's got a market cap of $3.5 billion. Now, it's roughly 1.5 years ago that I made the last update on Polkadot. That video, though, outperformed in terms of attention. So it made roughly double the amount of views that a regular video on this channel gets. Now, why did I not make any more updates? It's because long-term Polkadot does have a very hard time outperforming Bitcoin. What we see here is the dot price relative to the Bitcoin price. So I want to take away the general macro environment, as in when Bitcoin and Ethereum goes up, and most altcoins go, of course, up as well. When they go down, most altcoins go down as well. So I want to get rid of all of that correlation. I want to look at what is an altcoin doing idiosyncratically. How does it perform better or worse compared to Bitcoin? And unfortunately, for the last 5 years, Polkadot did very poorly versus Bitcoin, an underperformance of 97%. Now, some might say that this is an unfair comparison because Bitcoin does outperform most altcoins long term. But have a look at the Polkadot price relative to the others market cap. So that's now the market cap of all the altcoins that are not in the top 10. So Polkadot is included in that. The chart really doesn't look that different. Right, an underperformance of 96%. Where does this constant underperformance come from? Of course, the answer is token inflation. Polkadot does have token issuance via staking. The number of DOT in circulation increases as the staking reward prints new DOT tokens over time. This is a problem we have with many altcoins. Those linear unlocks that we have for Polkadot, we have in general across the altcoin market. And it's currently worth roughly 700 million per week. On top of that, we've also got cliff unlocks. So that's when early investors and with the team, they get token allocations as reward for their effort to help projects. That's additional potential sell pressure. If we add both in a combined chart, we get very often more than 1 billion worth of potential sell pressure per week. So if every week we do not see at least 1 billion of additional money flowing into the altcoin market, we will see the altcoins underperform. Now, when I say underperform, we always have to say relative to what? Now, Bitcoin has a market cap that's roughly 3 times larger than the altcoin market cap. So this is BTC divided by total 3ES. That's the market cap of the altcoins. They are not stable coins. They're also not Bitcoin, not Ethereum, everything else. So Bitcoin's market cap is more than 3 times larger. Now, Bitcoin has an annual inflation rate of 0.83%. With a market cap of 1.9 trillion, that turns out to be roughly 300 million worth of selling pressure per week. So Bitcoin has potential selling pressure through mining of 300 million. The altcoin market, which is only a third in size, has selling pressure more than 1 billion. And that delta in potential selling pressure is the main reason why many altcoins tend to underperform, including Polkadot. This chart is no coincidence. Of course, Bitcoin has some additional things going for it, right? The accumulation by the treasury companies, for example. That's not necessarily a driver for Polkadot. On top of that, we've also got the accumulation through the ETFs. So there is the potential story here that there might be actually no net selling pressure at all from the Bitcoin mining, because the accumulation through those entities might be quicker compared to those 0.83% per annum in mining expansion. By the way, you're more likely to get videos like this in your feed on YouTube if you are subscribed. And so that's then why the DOT price versus Bitcoin looks like this over time. Now here's the same on a logarithmic scale. And the big question is, when crypto is that highly correlated, so when Bitcoin goes up and most altcoins go up as well, then really within a portfolio, it's just a matter of should we buy A or B. Diversification across different assets does not make much sense if the correlation is very high. Diversification helps us if correlation is low. When one thing goes up, the other thing might not go up. When one thing goes down, the other thing might not go down. When the correlation is not very high, then we want to buy both assets. Then we want to be diversified. If there is high correlation, as happens within the crypto space, we should rather focus on what's the best asset. And we rather have competing assets. So Polkadot, in a way, even though it's a different kind of asset, is competing with a potential allocation towards Bitcoin as well. Simply because they are traded in that manner. Simply because the prices tend to move in similar directions at the same time. And so instead of trying to pick the potential rally here, right? This was a rally of DOT versus Bitcoin of more than 100%. Instead of speculating on the rare occasions where we might outperform, isn't it better if we follow a strategy where the trend is your friend? Because what we can actually do is we can flip this chart, and that then looks like this. This is Bitcoin relative to Polkadot, and we can get that kind of performance. And it does outperform buying and holding Bitcoin quite a bit. Buying and holding Bitcoin is here, the line in orange. Now, how do we get this kind of performance? It's by betting on rising prices of Bitcoin, while at the same time betting on falling prices of Polkadot. And every now and then, when Polkadot rallies, when Bitcoin versus Polkadot actually loses, that's a potential opportunity to allocate towards that strategy even more. So we can dollar cost average in a strategy like this. Instead of just dollar cost averaging into Bitcoin, we can regularly allocate towards a strategy like this. And that's where I believe the real alpha is made. It's not trying to find the one or two altcoins that might do better in a market like this. It's simply to bet on the market structure. And the market structure is clear. There is a lot of additional sell pressure coming to all kinds of altcoins all the time. And that sell pressure might be non-existent for Bitcoin. That's why we tend to see this outperformance of Bitcoin versus most other altcoins, including, of course, for Polkadot. I'm following this approach for quite a while. Here is my monthly alpha versus buying and holding Bitcoin. So every data point here is a monthly either outperformance or underperformance. So yes, I do have my losing months as well. The dotted line here, that's the 12-month average of those dots. If we average all of those dots out, we come to a monthly alpha of 1.9%. So I am a very conservative. I don't use too much leverage. I do use a lot of diversification, but I also dollar cost average into my portfolio. And that's why my net worth is growing like this over time. So I've got my alpha, I've got my dollar cost averaging, and if things continue the way they are, hopefully I can close to double the net worth again over the next 2 years. I've also created a copy trading capital pool where we do exactly that, right? We bet on falling prices of altcoins by betting on rising prices of Bitcoin, Ethereum, and Solana. And we started that copy trading capital pool in 2025. This is 5 months of data. When we annualize those 17%, we come to a post-fee return of more than 40% per annum. So that's really the target. This is how we should make our money long term. We have to compound this quickly without trying to rely on random moonshots. And so we started a new copy trading capital pool this year already. It's starting quite successfully as well. So there are 2 potential ways to participate in this. You could either manually copy trade whatever I do. So I share every single trade that I make to all the premium members as well. Or you can allocate towards a copy trading pool. For the manual trading, there is the monthly premium membership. So as said, I announce every single trade that I make over here. I'm not going to share more than this single trade, but everything that I do is live announced to all premium members. If you don't have much time to manually copy trade, but you rather have more capital, you can instead join the annual membership. That's 10 times the monthly plan, so you do save a little bit. You save $250 per year. But of course, the main advantage is that you can join the automated copy trading as well without handling the trades individually by yourself. Looking very much forward to seeing you on Premium. Also looking forward to seeing you next time in YouTube. Thanks for watching. See you next time. Cheers.